The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the October 21st fabulous Friday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I at just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone. Now is not too soon. 877-927-6648. Of course, you can call us at 727-445-1044 if you'd like. By email, it's steve@tfnn.com. And, of course, inside the Tiger's Den, an instant message will do you. So let's go ahead and get this show started on fabulous and fantastic Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, the Dow is trading down 52 points, trading out at 18,109. S&P is off about 4, trading at 2137. NASDAQ Composite up 8 points, trading at 5250. And the Russell is off 2.5 points. The DAX closed down up 9 points. The FTSE closed down 6. Gold is flat, trading at $12.67. Silver is basically flat, down 6 pennies at $17.48. Light sweet crude is flat, up 4 cents, trading at $50.67. U.S. dollar index up 371 ticks or so. I've got a 10-minute delay on that, so it's probably off by just a tad. Leading the charge here to the upside, Alkermes PLC up $13, 30%. SV as in Victor, boy. SVB Financial Group up $8, 7%. Amazon up 8. Sam Adams, it's about time. Having a beer on us, it's up $8. Time Warner up 7. To the downside, Regeneron Pharmaceuticals off 8.50, Biogen off 8, Priceline down 7, Athena Health off 7. So biotech, healthcare sector looks like that's getting hit just a tad. So where do we begin? Well, let's begin with what I did at 10 o'clock this morning. Personally went long, but sent out a email update after the market opened to clients and said, hey, guess what? The markets are down. They didn't need me to tell them that. The Dow was trading up 100 points at that time. The S&P was down 10, 11 points, something right around that area. And what I said was just updating you that guess what? Market has a setup that it's just put in a short-term bottom. And this is just a pattern, repeating. And I apologize if you think sometimes I just repeat things over and over. It's not my intention to do that other than to say these patterns are so consistent in repeating that they really help us to understand what the market is doing. So, in essence, I want to update them, which will mean updating you as well, what has taken place since 10 o'clock this morning. What is it that you and I were looking at 10 o'clock that said, yeah, because we had our game day faces on, did we not? I mean, we got game day. It doesn't just start tomorrow. For you and I, game day is every day. And as a group, we said, not so fast. Not so fast at 10 o'clock this morning as the market was pushing down. Why? Well, you won't be able to see it. Actually, I probably could open up the newsletter. That might actually be an easy way to do it. Let me see if I can do that because I can't show you the snapshot. And then we'll go take a look at what it's currently doing. So where is that? Here's the update. Let's see. Well, yeah, I can show you this chart right here. So here's this chart. This is off of page 1. If you're watching us on TigerTV, I probably could blow it up. We don't really need to. What we're looking at right here is a picture of the VIX index. We could see that what it was doing was it was trading basically at or below the 50-day exponential moving average. Now let's go back and take a look at the VIX. It also had rejected another area that it needed to get above, especially with the market being trading like it was, and it was not. And we can see that price now has moved down. Now it's moved down to was nowhere near the yellow line, which is a little bit of diagonal potential support out here. Well, you and I would take a look at trend lines. Well, guess what? The VIX has a trend line too. But just with regard to 9 o'clock this morning, the VIX was not above Stevie's green line, Stevie's red line, and that was saying, hold on a minute here. We're going to see some kind of relief rally. Didn't say what the duration would be. I'm going to show you what the duration has been thus far and what price needs to do. So that was number one. That was the very first thing that I took a look at and said, I was taking a look at that while my buzzer on my phone here, which since I have upgraded to the new operating system on this iPhone, it's junk. However, the text messages still get through, those that say, hey, Stevie, your phone is singing in the Stevie Wonder key of G. You might want to take a look. And so where were those G's going off? Well, we had one going off in the NQ short-term chart, 10-minute chart out here, right? If we just simply take a look at from that little, I think we talked about this yesterday, little Tom DeMark TD13 sequential count out here. And from that high down to the low this morning, this actually took place at 9:40. You get your key of G. You get your seventh wave move to the downside. Okay, so that's like one little buzzer that's going off. Then we have another buzzer that starts buzzing. That was in the, was just after that. No, it wasn't here. It was in the Dow, right? The Dow was down 100 points. So here's the Dow chart. That buzzer was saying, hey, guess what, Stevie? You got the key of G on a 30-minute chart here in the Dow. So buzzer number 2 was going off. Buzzer number 3 actually wasn't a buzzer. I don't have this buzzed just yet. Was prices moving lower inside the ES mini, doing less relative energy. So both you and I knew at that stage was to our responsibility was to now watch to see if the cavalry was indeed going to show up. And if they do show up, what do? You take some action if the reward risk is in place out here. And so by the time I sent that out, we already had the confirmation that a short-term bottom was in, just like a short-term top was in up here with the same pattern, of course, at the highs versus at the lows out here. So then if we take a look at what was to be was, okay, where is price likely going to head to? I'm just taking you through step by step by step, Stevie's step by step by step. You might want to consider adding some of these step by steps to you. And then we're going to come take a look at now what does it mean right now? Okay, so we'll get there. But before we get there, how do we know where we're going unless we know where we come from? And at least that's what I think. If we also, the buzzers, they weren't buzzers, but there was as I opened up this chart here and saw that price was above the green horizontal lines, with the exception of the Dow, I was like, okay, there's another sign of a bottom that's coming in play out here. But what I did was I then went over really to the daily equity futures contracts. And at that stage, I had to make the decision, is it worth the reward to risk to take the trade? Because I knew that 21.3350 was resistance, which is the weekly TAS market profile. And it has proven to be resistance. We come back from this break now. Let's go take a look at where we at, what the market is doing, and where's it likely to go to. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So I don't know, it was around 11:30, 11:45, 12 o'clock, something like that. I then, it was after Basil's show. But when my trading for the day was pretty much coming to an end, or at least I was saying, okay, got in the trade. I know where the resistance zone is. It was very plain and simple, 21.33.50, I believe, was the number. And then I came to the 30-minute chart, which is what I was trading off of, and said, okay, what else is out here? And then I just simply drew those descending price channel lines, what subscribers and I talked about at Wednesday night's workshop. Now, the things that I share and teach, or we do here, on the shows, I respect this stuff. I can't always tell you why it works. I just know that it does. You respect it, and you go ahead and you take action. Sometimes you take massive action, right, in the face of and now, just think about it. What were your thoughts this morning? For those of you that are active traders who were following the market, what were your thoughts this morning as the Dow was blasting up 100-plus points to the downside? Was your thoughts, hey, this is it, time to pack it in, the market's heading further south? Part of the reason that I sent out the newsletter update at 10 o'clock was I didn't want subscribers thinking that they should be jumping on the short wagon, not while staring in the face all of these short-term bottom patterns that were out there. So, I said, hey, there's no action that you need to take, because trying through a newsletter to trade intraday, man, that's a lot of work. It's just too hard to try to get that information out there. But I do provide a lot of enough information that we do have people that utilize the newsletter in order to be able to do that. So, and certainly the tools that we share. So if we take a look at the ES Mini here, as soon as it got up to that 21.33, I waited for a few moments, took a look at some other intraday stuff, and I said, this is pretty easy. Time to go ahead and take the trade off. Of course, what do you think I was saying by taking the trade off at the 21.33 area if we would have seen price bust through this spot? Do you think I would have jumped in on the long side? Of course. I would be happy to pay a couple of points for information to tell me that this little descending price channel is over. But we've hit resistance. We've hit a wall. And at the same time that it was doing that, meaning the ES Mini, what was also going on, really these two charts here, but we can see that little rising trend line, yellow diagonal line on the VIX out here, was also in essence holding as a potential support area. So that also said to me, that could be it for the day. I don't know whether it will or it won't, but towards here's the deal. At 3:55 in the afternoon, if in fact this level holds, or better yet, I change it from this chart because for me it becomes a bit more clear when we just take, because you've heard me say that the body of the candle is the essence of price. So the body of the candle is the essence of price. What do you think that means to me? That means we pay attention to the body of the candle. I don't really care about the wicks. Now, I do care, but when it comes to trading and really understanding what the market is communicating to us, to a certain extent, I don't care. When it comes to the VIX index, understanding where it closes, so the yellow line is a 50-day exponential moving average. You already know how important that is to me, right? And it should be important to you as well. But there are other aspects that the volatility index, if you master the volatility index, it can assist you so much with regard to your trading. Don't ever say, just automatically turn off the voice when somebody says that the VIX index is trading low, and therefore there's, what's the word they use? Complacency and all that kind of stuff. Man, you can't trade off of that information, but you can trade off of a rising bottoms pattern, especially from a closing price basis inside the VIX index, especially when it's below the 50-day exponential moving average. So when we take a look at this, what do you think is, and if in fact this is the way that if right now it was 355, what action would you take? Would you want to be long or would you want to be short? Now, I'm not referring to people who have intermediate term, long-term funds in the market. You guys need to stay in the market, okay? You're going to be fine. You're going to be able to weather whatever little storm is out here. The markets are moving higher. Let me be clear and unequivocal. Out, okay, as clear and unequivocal, or equivocal, I don't know which one it is. I'll just make it like this. Let me be as clear as I can be. The S&P 500 is headed to 2350 or 2450, maybe even more. So, and the Dow 20,000. Okay, that's where it is headed to. And so for your long-term funds, there's not a signal out here anywhere that says it's time to unload. But when I'm referring to, we take a look at this day-ish type trading or what's going on right here, right now, the signal here with the rising bottoms pattern is that you would, if you were, now you don't have to take that trade right now today. If you're in the equity futures contract, just 6 o'clock in the evening, take a look at it, see what this pattern is looking like. But to me, the signal here, the message here, even though the VIX is below the 50-day, is the market is getting ready to continue moving lower. Just inch by inch by inch, no big, huge, and it may continue to do this for a period of a couple of weeks out there. We've talked about that together. We all know what that means, the outcome of the election and so forth. So that's now in this case here, you don't really have to take any more action today. Now the question would be, or the question should be, well, Steve, what would you do if in fact you saw the ES Mini break above that 2133 level? First, it really depends what time it is. It really depends what time it is. And then I'd have to do the old risk reward. And the risk reward would say, okay, what's the potential reward? The reward of breaking 2133.50 is a move to the 2146 level. So that's a good move. I would want to participate in that move. Let's just simply not even go there. Let's just say our intraday trading for the week is over, and we don't really have to worry about that. So with regard to the VIX index and where that's at, with regard to where's the S&P. So now let's go over to the S&P 500. Let's take a look at it. What else would need to take place as you look at this chart right here? Because really very self-evident. What else would need to take place in order for you to want to take a short position in over the weekend, or something that you would be looking at on Sunday evening? In other words, you would be preparing for the short message as long as the market gave you that opportunity. Yes, it is Stevie's red line. It is that price oscillator unchanged line. On the S&P 500, it's 2140.66. Why do I say that when I just in a prior breath said if you're long-term funds, this market's going higher? Because it can go lower before it goes higher out there, but I don't want intermediate term, long-term fund people worrying about whatever it is that they're hearing out there. It just ain't so. So with regard to the S&P 500, if price can close above that 2140.65 level, the S&P 500, no, Stevie. First of all, that rising bottoms line that we looked at in the VIX index, it's not going to be there. It will have broken through that area, or at least should have broken through that area. And you get above zero, it says this price oscillator down below will have turned up. It turns up, I'd have to see something else out there that would say, yeah, being short would be the right move. But right now, that's not the case. We have a rising bottoms in the VIX. You and I took a look at it. We have the price below the oscillator unchanged line. We have the price oscillator below zero. That says the market still wants to move to the downside out here. Where? I don't know exactly where. We take this one step at a time. Steve Rhodes with TFNN. Those are the steps with regard to the S&P 500. Be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Back folks. So got a question here from Bill. Hello there, Steve. Will the GDX try to pull back to the 0.382% retracement level? So let's go take a look at the GDX. Gold right now has just turned slightly positive, up a dime or penny out here. So but in the face of a rising dollar, if you take a look at that U.S. dollar index, that's a quarterly chart. That probably is not going to do us a lot of good. But if we take a look at that daily chart out here, certainly moving and on its way to complete at least a 1-to-1 A to B equals CD to the upside. 99.56 looks to be the exact number of where it is headed to. But if we go take a look at the GDX itself, right now trading at 24.58, and let's go take a look at the 0.382 retracement level and answer the question out there. Let's take a look at it. So if we go from the low out here inside of the GDX, that's down in the bottom of October the 11th. From that low to the high out here on October the 19th, the 0.382 level would be 2404. So, Bill, in order for that to play out, the first level that you're going to need to see the GDX crack is going to be the top of its TAS daily box. Those are the blue horizontal lines going down across my screen. 24.45 is the number out there. So the answer of whether it's the 0.382 retracement or a 0.618 retracement, first what you need to see is a price get below a level of what is now support. Atop of a box, let me turn off the retracement levels out here. The top, if you take a look at these TAS boxes out here, very helpful sets of what ordinarily would be invisible levels of support and resistance. So when we take a look at this box, the bottom of the box ideally is support. The center of the box, this is a little dash, small little dash line on my screen. That is what's referred to as the point of control. That is, in essence, where buyers and sellers believe there's most value within inside this range out here. So they're most comfortable with paying that price or selling at that price, buying at that price. A little congestion zone. And the top of the box, in essence, is resistance. The end of that and when we take a look at, so the bottom of the box is support, buyers. Top of the box, think of it as being sellers out there. When either sides give way, it just tells you that the buyers did not have enough strength to hold support, or sellers did not have enough strength to hold resistance. Once you get above a level of resistance, in this case here, which is what we're talking about, old resistance should become new support. Now, typically you like to see tests of 3 to confirm that, and today happens to be day 3 of that test. So it would be very positive for the GDX to be able to continue to hold above 24.45. If it does that, when it does that, whether it makes a retracement or not, we want to be paying attention to that descending price channel. That descending price channel, if broken, once broken, would then signify to you and I that we have a change in trend that is underway. The other element, the other area that we would be watching and paying attention to would be the price level of about, let's see if I can give this to you here. Oh, that's weird. It looks like about 23.51. Now, 23.51 just so happens at that point of control. I'll put this chart up here for you. It also happens to be that oscillator unchanged line. 23.51. You can't see it. It's right behind this 23.51. That's black. So that is really the TAS market profile. So we've got both. We have two indicators that are generating this exact same price signal. So if you were looking to buy into the GDX, let's assume that Bill is not in it. What you would be pulling for is price pullback below the 0.382 retracement level. You'd really like to see price come down to about that 23.51 area. So I hope that assists you with either side of the trade that you might be in on the GDX out there. Okay, so we covered that. Covered the markets. There's not much for us to really do or look for or action to be taken inside the markets, in my opinion. Not at this stage. If you're in on a trade, that's fine. Then always make sure that you have your stops in place out there. Now it's really a matter of the market's turn to reveal more information to you and I. We've identified resistance up at the top. We see that rising bottom. So the message is relatively clear. Its message is relatively clear to me. I think that it's clear to you as well. Why don't we take a look at, so Microsoft is the talk of the town, and it's the talk of the town, big, huge move in Microsoft. Oops, let's put it up here, MSFT. But let's go ahead and take a look at what it's actually doing, the quarterly. It's going to take a look at quarterly because that's going to more easily take us back into that all-time high that it had formed. We've gotten above it. We're trading just at it or below it right now. Now, that all-time high, 59.97, coming from back in October of 1999. Right now, we are trading at, the exact price is, Johnny, $59.99, 2 pennies above that level. So what is likely to happen here with regard to Microsoft? Well, now let's come back to the daily chart, because my daily chart's not going to show you 1999 data. Here's what we know. Price has finally made a 100% move of a move, clear and unequivocal. That's what it's done. Now, when a market makes its way all the way back to making that 100% move of a move, oftentimes price will do something else, like take a breather out here. Now, if we take a look at the daily chart, what does take a breather mean? Let's go ahead and put the volume pattern out here. I think we've got some good volume inside of this equity out here. And some of that volume just simply may be Ballmer selling, for all I know. I mean, if I were Ballmer, I would sell some of that, knowing that 100% move of move can often be the point at which, the market's going to do something different. Does it have to? No, it does not have to. But you're now up against what should be an area where people will go ahead and maybe take some profits out here. If that's the case, does that mean it's the end of the move in Microsoft? No, that's not what we're saying. That's not what I'm saying out here. But in the case of Microsoft, if it closes back below $59.97, that's what it would have to do. Right now you're at $60, so I mean, you're 3 pennies above that. Then you would start looking for these. I would start looking for these horizontal levels of support, our TAS market profiles. Does 58.50 hold? Does price get back inside the box, bring in 56.41 into play, and maybe even 54.31? I don't know. We got to take a look at this also one step at a time. But when you make that 100% move of a move, it's oftentimes a place where the market is going to go ahead and do something different. Volume today, 58 million shares behind that move. So you've got nice volume. If you just simply put this on a weekly basis, volume on a weekly basis is 173 million so far. So that most certainly is, is good volume for Microsoft. Okay, so that's what that is doing. Should you short Microsoft? No, that's not what I'm saying. I'm not saying short Microsoft, although it is interesting. Let's go ahead and put that monthly chart up on my screen. Let's see, is this moving higher with less relative energy? That would be a question, would it not? I have the monthly chart up on my screen. So here's what it's doing or it's not doing. Unfortunately, this is going to I've got a bit of a delay here, a dilemma and a delay, really. So I'm not getting the actual. You can see this is showing a trade at 57.25. We know that's not the case out here. But at this stage, it does look like price has been moving higher, doing it with less relative energy. Let's do our wave count to the upside off of the lows out here, 2003. So that's not going to give us anything right there. Let's come back and restart this count. I may have to do that as we go into this commercial breakout here. Which is what I'll have to do. So when we get back from this break, we'll go take, there we go. So yeah, we can see it's moving higher with less relative energy out there. Microsoft. That doesn't mean it's a sell, folks. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Let's go take a look at some individual equities, see what they're doing out here. So let's look at Biogen. That's the leader in the clubhouse to the downside, BIIB, one of the top I believe it's one of the top 5 holdings inside of the IBB. This is a weekly chart. So let's go ahead and keep the weekly chart up on our screen here. So in the case of Biogen, BIIB, we can see that this thing had a gap up back on the week that began August 1st, 20 million shares on the way up. Prices just simply come back to that breakout area with really light volume. Let me get the noise off of this chart out here. So when we take a look at the noise, I'm just simply referring to the TAS boxes, especially when we're on a weekly chart. So if you and I were going to draw a level of where this thing broke out from, right, we would immediately just draw a line right there at the, in essence, what we'll call the top of the gap, the high of the session from the week that ended July 25th. You'd see that that is priced at 290.58. We're trading at 290.49. Does that mean a whole lot? No, because we could take a look at the bottom of that candle as well, being a level of support, which is 285.02. The real important element here is that prices moved higher on a weekly basis with 20.7 million shares. And this week, you're pulling back into it with 5.5 million shares. So if this is one of the top 5 holdings inside of the IBB out here, let's put this on a daily basis, see if there's any different signals out here. You know, this would be saying, well, this is this would be suggesting that the IBB would be forming some type of bottom. Now, with regard to the daily breakout, the volume was 7.8 million shares. You're pulling back with 828,000 shares today. So what Biogen is doing is simply pulling back into an area of where this thing had broken out. So if you were looking to own Biogen, you know, we may be near that point in time when you would really want to go ahead and consider it. There are no other patterns because of this huge breakout session out here, no other patterns that give us any kind of bottoming signal other than just pulling back with some light volume. Of course, we would want to know what the entire sector is going to do. So, in fact, let's go take a look at the IBB itself. So let's go look at it. Then we can look at some other individual stocks. That's what I would do. That's what you would do as well. Now, when we have a daily chart up on our screen, I do want to understand where our TAS profiles are. Now, interestingly enough, here with regard to the IBB and having your back up against the wall, there is a brand new daily profile that formed this week. See the blue lines on my chart? Let me just turn off price, because as you and I were talking about this earlier, the positioning of where these where the center of the box is, that's the dashed line, is in relationship to the top or the bottom, reveals a lot of information to us. And we can see that that is much closer to the bottom of the box. So that says that price should be able to hold this 265.24 area. And if Biogen is one of the top 5 stocks or top 10 stocks inside the IBB, well, we know that message is it doesn't have enough volume to push that thing to the downside. Now, where would you want to buy this? You'd either want to buy the IBB if that's what you were interested in doing, right about where it's at right now, to the 265 level. And if you saw a move where it closed below that, I'd say that swing point, both the box as well as the swing point from October 17th, we would know that we would be wrong on this trade out here. Is there any other pattern inside of the IBB itself? It looks like there is an A to B equals CD to the downside that completed yesterday. It was a 1 to 1.618. A to B equals CD. Why do I say that it completed yesterday? You had that nice little bullish candle. However, that bullish candle is in essence being, what's the right word, negated today. You like to see follow through. So then what would that say to me? That'd say, okay, you don't have that bullish signal and confirmation. Maybe I'll just be patient. If we take a look at this swing point out here that is trading into 1.4 million shares, but moving into even a swing point with light volume today, 491,000 shares. Nonetheless, you'd want to see price today in the IBB close above 267.91 in order to really consider that trade. May just be a short-term trade. May just be a move up into the price level of about 281.73, which is the top in essence of the daily box and the bottom of the weekly box. That should be some pretty significant resistance inside of the IBB out there. Let's take a look at a couple of other equities here. It looks like in the healthcare sector, Regeneron Pharmaceuticals, what is it doing out here? Regeneron Pharmaceuticals moving below a swing point from a few days ago. That had 498,000 shares. Light volume, 296,000 shares. Nonetheless, you take out a swing point, you do it with volume, or lack of volume, says that you can continue to keep moving to the downside. Let's take a look at its A to B equals CD out here. That's going to give us a price projection right now. You're at the 1-to-1. This would suggest to me that Regeneron Pharmaceuticals is going to make a run for the price level of about 352.07. That is the bottom of its weekly TAS market profile. What else do we have going on out here to the downside? Athena Health, ATHN is the ticker symbol, gapping down out with earnings here. And we can see that shareholders, no matter what it is that was said, they apparently don't like it, and they don't like it in droves out here. You've got this trading below. This is a larger potential A to B equals CD to the downside. If we put, we'll see on the weekly basis. But the swing that I take us back to is February 11th, which only had volume of 320,000 shares. Today you gap below with 2.1 million shares out there. So you've got big volume getting below a swing point. Let's pull this back a little further on the left, see what else we can find out here for any kind of support. That would take us back into right about here, October 17th, price low of about 107, volume there about 2.2 million shares. So you're moving back into a swing point that was even lower with similar type volume. What does that say? That says Athena Health is very likely going to at least test 107.88. You're at 112.92. If you take out that level combined with the longer A to B equals CD to the downside, it's not looking good for Athena Health out here. That was a smaller A to B equals CD. So let's go take a look at the weekly chart out here. You see, the more we pull the chart back to the left, the more information that we actually get out here. Of course, we can see trend lines, channel lines inside of this equity. If we take a look at those trend lines, where are we at? You're pretty much trading right down into it right now, this week. And we can move it down just slightly, but you're trading right down into it. So breaking a trend line with volume is never a good idea. Never a good idea if you're looking for this thing to hold. The swing point, the shorter-term swing point, is from the week that began February 8th. That had 2.7. You're at 4.7 million shares. So that A to B equals CD could or would look like this. giving you a price projection inside of Athena Health. That does not look good, of about 88 buckaroonies. But really, you got to go back into the left-hand side of this chart and recognize that what could potentially support price is that low from the week of May 5th, 2014 at about the 97.30 level is the number that you would be watching. So that's ticker symbol there, ATHN. To the upside out here, ALKS, Al-Kermeh. I don't know how you actually pronounce this, but that's going to be my shot at it. This has got some big volume in it for this week as it goes into its wall of worry, which suggests, though, that price ought to at least now target about the 63, 69 level. And that's where it began a huge downdraft the week of January 18th, 2016. But today, big, huge move with volume to the upside. Ticker symbol there, ALKS. Kind of reminds me of Alka-Seltzer. Fizz. Wow, look at this. We got the markets are going to turn green. ES must have broken through that descending price channel. Steve Rhodes with TFNN. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. So if we take a look at where we're at in the markets at 154 in the afternoon on Friday, that number 2133, and we're focused right now on the ES Mini, 2133.50 to 2133.75. That's the bottom of the weekly TAS market profile. Excuse me. We're trading right now at 2133.50. So no significant, no break of a level of resistance, even though a very kind of small break of that descending price channel. But remember, the body of the candle is the essence of price. We're only trading about a tick or two above that. And therefore, if we go take a look at 10-minute charts here for the ES Mini, what we're going to see is that big upthrust that we had back here at 1340, so at 140 on a 10-minute chart, that was 21,000 contracts versus 36,000 contracts. That's from 1140. So there's not a lot of enthusiasm. Just another bounce right up into a resort, but right up into resistance out there. What the heck is resort? And if so resistance again inside the S&P 500. The number you're looking at is about 2141. We'll call it. I think it's 2140.96. But that's going to change just a tad or two. And as long as the S&P stays below that, and as long as you have that rising bottoms line inside the VIX index, which as we speak right now, we've got it. It actually says I wouldn't scratch this one up as the markets want to zoom higher. So that's how we'll take a look at things at 155. If the market reveals additional information to us, and we'll deal with that on Monday. If we take a look Monday, if we take a look at all advanced decline price oscillators, New York Stock Exchange, that's left-hand corner, the NASDAQ Composite dead center, and the Dow, the third chart out there, we can see that all of those are down below the zero line out there. So that is says that the ball is in the hands of the bears out there. So just really kind of a consistent message. However, the markets will not get rocking and rolling to the downside inside of the ES Mini until you see some type of close below 21.22. Otherwise, we're just dealing with some trading ranges out here. Inside the NASDAQ, much further to go before it can start blasting off to the downside. You need to get below 47.92.50 and stay below 47.92.50 in order for the market to get rocking to the downside. Interestingly enough, the Russell 2000 has really been respecting the apogee and perigee lines the last couple of months out here. That is the bottom right-hand panel chart. And you can see how well that has, this one has actually worked really well, better than the ES Mini. If we take a look at once that lunar phase came in, we can see how price just simply stayed below, was trying to bust it, finally busted through and closed through it on 6:30 in the morning on October 17th. An old line of resistance, price came back, tested it as support before it went ahead and took off. And this morning, on the way down, tested it again as support. So with regard to the market turning south, perhaps it is really going to be the Russell 2000 in relationship to Stevie's green line that will be the one that would give us any kind of signal. At this stage of the game, the signal is certainly neutral to bullish, not bearish, inside of the Russell 2000 equity futures contract. And that's taking a look at a 30-minute chart out there. So, folks, hope it's been a great week for you. For all you that attended the workshop on Wednesday night or are listening to the archive, thanks so much for joining me. Stay tuned. Our polar bear, my favorite polar bear, David White, he's going to be up next. And then we've got the Tom O'Brien Show from 3 to 5. So have a safe weekend, a healthy weekend. It's cooling off down here in the south. I don't know what it's like in your neck of the woods, but enjoy your weekend, and we'll look forward to seeing you on Magnificent and Marvelous Monday. Take care, folks.
Larry Pesavento has just announced a special offer for subscribers to his trading service, Fibonacci 24/7. Right now, you can get a month of Larry's Fibonacci 24/7 while gaining access to his upcoming live webinar, The Pattern That H.M. Gartley Missed, taking place Wednesday, October 26th. This live workshop will be archived for subscribers if you cannot attend live. And if you order right now, we'll also send you a copy of Larry's book, A Trader's Guide to Financial Astrology. This book retails for $90, but we'll send it to you as part of this special offer that runs through the night of the workshop, Wednesday, October 26th. Sign up now and get a free copy of Larry's book, a month of his Fibonacci 24/7 trading service, and a live workshop on the pattern that H.M. Gartley missed. With a 30-day money-back guarantee, this is an offer that you can't let pass you by. Sign up today for Fibonacci 24/7 by visiting the front page of TFNN.com.
You're watching Tiger TV.